The solar energy market has become increasingly saturated, leading to widespread misinformation and a lack of transparency. Welcome to the Harmon Solar Podcast, offering a straightforward, honest perspective on going solar. Each episode dives into key topics to help you better understand the industry. Our goal is to educate and empower you to make informed decisions about solar energy. While solar may not be the right fit for everyone, we believe everyone should take the time to explore it. Our mission is to increase your knowledge, not your bills.
Our guest today is Bill Spar of ARP Tax and Estate Planning. In this episode, we're diving into the critical details of how solar affects your taxes. From understanding the Federal Investment Tax Credit, ITC, to the importance of timing, ownership, and installation specifics, Bill breaks down exactly what's involved and what's eligible, so you can make smarter decisions when going solar.
Welcome to another edition of the Harmon Solar Podcast. I'm Rob Romano, VP of Sales and Marketing at Harmon Solar. And with me, as always, my friend, my partner. I did say friend.
Yes.
Should I say that?
It's an upgrade from last week.
It is, because I said you weren't my friend.
I know,
last time.
right?
That was horrible.
Wow.
That was mean.
A lot can change in a week.
That was mean. I was in a bad mood.
That's right.
I'm married.
On that note.
Ben Walschlager, who you guys also know as Mr. Everything. Ben, welcome back.
It's good to be here.
Is it good?
It is.
It always is good for you.
We have a very special guest, someone that we've wanted to bring on for a long, long time.
We've been talking about bringing on a tax professional because we absolutely are not tax professionals.
I'm not.
And we get asked every day about the tax side of this.
Yep.
And we can give you our opinion, but it's not Harmon's opinion. It's my personal opinion,
Right.
Which was worth nothing when it comes to this, because I'm not an expert and you're not an expert.
Right.
So I'm going to start off by saying Harmon Solar is not a tax professional.
We had the flashing,
we have the flashing thing,
text.
right? We are not going to give you, this is a podcast for you to get one man's opinion in the industry, an expert in the industry, on how he does it and what he does. And then you can talk to him. Yeah. It might be a good idea. So
we're not a tax expert, so we brought one.
We did. So today we have Bill Spar of ARP Tax and Estate Planning, right?
Correct.
I got it.
Welcome.
You. Bill Spar, ARP Tax and Estate Planning.
All right, you're done for the day.
Yeah, okay, bye.
Have a good day, guys.
Thanks for joining us. We really appreciate you coming out and talk about this topic because, again, this is something we get asked every day almost.
Yeah, thank you. I appreciate it.
So we really need you to help us through this. So I'm going to let you start.
Sure. So
go ahead.
Tell us a little bit about who you are, how long you've been in the business, what you do, all that stuff.
Been in the financial advising world for 25 years, and we created the tax office about 17 years ago. And so we've been doing retail taxes for individuals, corporate businesses, small, large. We're nationwide, all 50 states, and we're capable of handling virtually anything. Mm-hmm. If we can't, we have the wherewithal to say we can't. And if we can, we say we can. So we want to be as honest to the public as possible.
Okay. Nice.
With that, what sets you apart from going to one of these big guys like the H&R Blocks of the world, or doing it online and going to one of those things? What makes you?
Because I can do a TurboTax in about 15 minutes. I'm done.
True.
He's in jail the next year, but
you probably can. You probably can.
So why should someone go to you?
Exactly. Well, what I tell most of the people that come to us is that one, we're usually more affordable.
Okay.
And so we don't want to discount our price and therefore discount the service. But at the same time, we don't have to charge exorbitant fees to put Super Bowl ads up and make sure that you're going to the masses.
Yep.
So we are a specialized firm. We do want to make sure that we stay small enough to remember your name and that it's not just pulling a number like going to, Baskin Robbins.
Right.
We want to make sure that you come in. We're an open door policy. We tell everyone if you're just driving down the street and you need a soda, stop in. We got tons of them. Just come get it, whatever you want. So we want to make sure that we separate ourselves from being nice, and then we separate ourselves on the quality of work that we do. And so we do regular mom and pop type individual returns all the way up to, again, to corporate and however that looks.
I like that. I mean, you can get solar from 50 other companies in the Valley.
Correct.
But, it's who you're working with, who you're dealing with, who you want to go into business with.
It's a common theme on this podcast, isn't it?
I know, right?
It's been a lot like
we're very, local mom and pop shop with everything that we do.
So I think one of the big things in the solar industry, a tendency that salespeople, whether they're just honest, dishonest, or they're just not informed, one of the things I typically will tell people is you're getting this tax rebate, not a tax credit.
Correct.
So can you kind of explain to our audience the difference between a tax rebate and a tax credit?
Yeah. And so I brought notes with me from the IRS.
Yeah. Okay,
so that
perfect.
When we're speaking, we're not just making fluff, right? Because there is a difference.
Sure.
And so I should have brought my glasses, but tax credits are, credit against the taxes owed.
Okay.
Right? A rebate means you're expecting someone to send you a check back.
Right.
And virtually all solar is tax credits.
Yes.
Not rebates.
Right.
And so that's an important function that people need to understand.
Right. I don't know if, these new solar reps who are out there selling, I don't think they're being malicious. I just think they're
think so.
I just think they're not informed.
It's
it sounds great. That's someone's going to write you a check and here you go to Vegas, go to Hawaii with this tax rebate, this tax check that you're going to be getting. It's a great selling tactic, but at the same time, it's dishonest.
And I think a lot of people, I don't want to say a lot, there are people out there, I know this for a fact, that are training these younger guys that's how it works. It's a rebate,
right?
That you're going to get this check from the government. I mean, I've had people say, I'm going to get this 15. No, you're not.
Right.
You're not getting a check.
Right.
You have to have a liability to get a check. I mean, not to get a credit.
Correct.
To cover that liability. So maybe I talk to people all the time. I say, do you understand what a tax liability is? How does that work when you do your taxes every year? Can you explain to the layman person who just like, what do you mean by a liability when I do my taxes? I don't understand any of this. This is all Chinese to me.
Yeah.
Kind of get into that basic stuff.
I actually use the industry of reverse mortgages as a good tool here, is because when someone does a reverse mortgage, they think that the mortgage company is going to be sending them money. And that's false. When you do a reverse mortgage, all you're doing is saving the amount that you were putting in. So let's say, for instance, your mortgage is $3,000 a month. When you do a reverse mortgage, you're not paying the $3,000 a month. So you're saving $3,000 a month. That's what people get misunderstood about. They think that they're going to get the $3,000. No, they're just going to save $3,000, which effectively stays in their pocket.
Yeah.
That still works. That's still a benefit, right?
Right.
The solar works the same way. A credit and a rebate. A credit goes against the amount that is owed, as opposed to rebate is, I'm getting it, like if you get a tax refund.
Right.
Tax refund is you put too much in. Now the government owes you money back.
Yeah. Yeah.
So that's a refund.
Yeah. Typically when I talk with customers, because I always tell them, my little disclaimer, I'm not a tax expert, but when you do your taxes, do you end up paying the government or do you get a refund? And, majority of the time people are like, I get a refund. Okay. Well, then you don't owe anything.
You have no liability.
You have no liability. You get a refund. So you might have to change a few things in order to claim this tax credit.
Yes.
Right.
And again, that's another thing that people don't understand is that when you're getting money back from the government, all you've done is given them an interest-free loan.
Right. You gave them more.
You gave them more. Now they're giving back to you without any interest.
Wow, that's a really good way of looking at it. And that's very depressing.
Yeah, yeah.
I've never thought about that.
Yeah.
It's an interest-free loan to the government.
Yeah.
When you put too much in.
The best scenario when you are doing your taxes is to just, net wash. You don't owe anything. You don't get anything back. Everything was zero.
We're a fan of actually having you pay a little bit.
Yeah.
And that keeps the proverbial red flag down.
Oh, okay.
If you want to give them $500, $1,000, even just a couple of grand, most people can afford that. And what that does is, for the most part, and let's hope this stays true, it keeps the red flag down.
Mm-hmm.
Interesting.
Especially for the self-employed.
Yeah.
Right? Because we have some clients that have side gigs that we're getting back $10,000, $20,000, $30,000 in refunds. All that does is say, hey, Mr. Irish guy, come check me out.
Yeah.
Why am I getting that much back?
Right. Yeah.
And so, we can only input the information that you give us.
Right. Right.
And our job is to make sure that you don't go to jail.
Yeah. It's always weird seeing, friends, family, whatever. They say like, I'm getting an $8,000 refund.
Yeah.
Like, what you just did, right? You just gave the IRS $8,000 extra that you may or may not needed to do that. So they're refunding you the money that you gave them.
Which you could have put somewhere else and invested.
Exactly. You could have put somewhere else.
And most people say, well, it's forced savings. Okay. Forced savings that you got a zero rate of return on.
Right. Right.
And it's your money. Well, don't you need that $8,000 during the year?
I like your analogy that you gave them a loan.
Yeah.
An interest-free loan. Yeah.
Interest-free loan.
So for our purposes in solar, so there's different ways you can go solar, right? The best and always best way is cash, right? People that buy the systems cash, now they get the tax credit. If they have the liability, they obviously can take advantage of that tax credit, the 30%. If they don't have the liability, they can also adjust how they're getting paid and maybe take a little bit more for themselves right now. This is what I'm assuming. This is what I talk to people about.
Correct.
Take a little more right now, and then you're going to owe some money at the end of the year. Tax credit should go ahead and help you pay that back, though.
It reduces the amount that you owe.
So that I'm right on, right?
Right on.
Yep.
Man,
that's
right.
That's what I tell people. Like when you do your taxes, do you get a refund or do you end up paying? I get a refund. Okay, well then you might need to change a few things.
Correct.
Because you have this tax credit coming from your solar system. So you might need to put a little bit more money in your pocket to offset that tax credit amount.
And you'd be surprised the amount of people that don't bring us their paperwork.
Yeah.
Or we're already done with their taxes. I'm like, oh my gosh, I forgot the solar. Really?
I forgot that $15,000 tax credit
exactly.
I have.
What is that going to do to your bottom line?
Right.
So that's one. Two would be financing. Right?
Yeah.
So there's financing deals. Not always the best way to go, but there are some good financing options out there. But it's the same scenario, correct?
Exact same.
You're just bringing that paperwork to you, say, okay, I financed this, blah, blah, blah. I am eligible for the tax credit.
Exactly.
Okay.
Let's talk about financing though.
Go ahead.
What happens? So you get that monthly payment. I'm paying $200 a month for my solar system. In the first month.
Are you aware of how solar financing works?
Not really.
Okay, this is going to be good.
It's going to blow your mind. Read the fine print on that contract. So you start off, when your system's installed, turned on, whatever you're paying, let's just say $200 a month. Again, every house is different. Don't be like, solar's $200 a month. No, that specific system is $200 a month. So $200 a month. That's assuming that you're going to be putting that tax credit back into the loan.
In 18 months.
In 18 months. So the check that you get in the mail that actually doesn't exist,
that never shows up,
that never shows up. You have to put that money back into the loan to keep your payments at $200 a month.
Correct.
In 18 months. After 18 months, if you don't put that money back into the loan, that tax credit back into the loan, your payments go up.
That $2 becomes $285.
$285, yeah.
For the next 23 and a half years.
So that's what a lot of people. Again, they're uneducated with their taxes and how the loan works, and they don't read the fine print. And then 18 months later, they go, "Why did my loan payment go up?" I'm like, well, when you did your taxes, you did your tax credit. What did you do with that extra money that you were putting in your pocket throughout the year? What?
And I'm wondering now that you're saying that, and we know this is a big problem. I'm wondering if people that you work with that have financed their solar, if they even realize that when they're getting it. Do they? Have you run into that?
You already said it. The sales guys are not educating their clients.
Right.
All they're trying to do is sell the product.
Right.
They're not fully disclosing all of the fine print, as you mentioned earlier. And so when they come to us or even to you guys after the fact, they've been completely mishandled.
They had no clue.
Yeah.
No clue.
They didn't realize that
very
the
little
loan
clue.
re-amortizes, and now guess what? Now you owe more.
Now I will say, let's be honest here, right? Yes, maybe a sales guy didn't go into it, and there are some guys that did it because they're not smart enough to understand it, or they were trying to be dirty. But as a consumer, you also need to read your contract.
Absolutely.
And if you read the financial document, it states very clearly that this happens.
Yeah.
It's there and it's in big, bold. I mean,
if you're going through that electronic signature and just click to sign,
that's a bad idea.
Like, okay,
I don't care what you're buying. That's a bad idea.
I agree. Be a plant. If you're not reading how you're going to plant it and water it and take care of it, don't buy it.
Right.
Absolutely.
Right.
See, I told you that when I purchased these.
Yeah, he didn't read the fine print on these ones, though. He just purchased it, So again, that I think that all solar reps should be talking to the homeowners like, oh, I want to purchase it, I want to finance it. Like, okay, do you have a tax liability? Doesn't matter. Like, well, no, it does, because your loan payment's going to be adjusted if you're not doing it correctly. So in some cases, and this is something that we talk about a lot on the podcast. We tell people, solar may not be for everyone, but everyone should at least take a look. Yeah. So in that specific situation, maybe a finance purchase isn't good for you. Maybe a lease is good for you.
Correct.
So because a lease, you don't have to worry about necessarily the tax credits.
There are loan products now, though. I could think of one in particular where what they do is the payment that they offer you up front is worst case scenario.
Yeah.
As if you didn't put in the money back in the tax.
So it's flipped.
I like that product because you're already starting. You can't get any worse.
Right.
If you put money into it, and they allow you 3 separate times over the life of the loan to put money back into it to make the payment go down. So that's a better product. I mean, for your customer, our customer, at least they know, hey, I can afford this payment now.
It's full transparency.
And I can also make it better for myself if I want to go ahead and do that.
Extra payments.
It's only going to be it's only going to be lower later on.
It's a fairer product.
Right.
I think it's one where it's hard to misrepresent.
Yeah. And again, goes back to the sales guy. He should be highlighting.
Sure.
Either in hard copy or, showing them it's exactly that this is the way that this is. And here's your opportunity to make it lower.
Yeah.
This is when you do it. And again, at that point, I would even say, it's his job to call the client and say, hey, next month, your payment could go down. What are you going to do about it, if anything?
Yeah. Mm-hmm. And then, good points. And then the third thing is a lease. We just kind of touched on.
Yeah, lease. Yeah.
So, and obviously leases are, I'm sure you've had people come to you and say, I've got a lease. What's my tax credit? Or there's none.
None.
Right. Because they don't own it.
Right. They don't own it.
Yeah. They're renting it.
Right.
That's exactly right.
So again, it depends on you and your situation. Yeah. If you're somebody who like, oh, I always get a refund. I like getting a refund. I'm not going to change anything. Okay, well then leasing might be best for you.
Yeah.
Don't finance your system.
Yeah.
Or if you're someone like, oh, I'm not a W-2 employee. I'm a 1099. My tax situation, I always end up owing a lot.
Yep.
Okay, well maybe leasing isn't for you. Financing is for you because now you get these tax credits coming to you. And you're prepared for it.
And this goes from, I'm sure you're seeing now in today's world, you're seeing people that get EV credits.
Yep.
Mm-hmm. They're getting, what else is there? Oh, the utilities. Like for instance, my AC just went out over the weekend. So I had to buy a brand new AC system and it actually comes with a $2,000 tax credit.
Yeah.
And because it's so efficient. I was like,
you got to have Energy Star in which to do that.
Yeah. And it's like this super efficient system. So it has this tax. I'm like, that's phenomenal.
Yeah.
I have a liability. So that works for me. Right. So I'm sure you see all that stuff, right?
Well, we get to see it I'll use my own home. We put in new ACs. We replaced every single window. And so part of our savings is the reduction in energy.
Mm-hmm.
So there's the first benefit, and we're seeing it greatly, but we also got tax credits for all new windows, which are high energy efficient, the air conditioners, low flow toilets, so on and so forth. All of those things work.
I like it.
Yeah.
You get tax credits, you get rebates from the utilities sometimes for that stuff.
Yeah.
Do you find that homeowners just give you that information, or do you kind of have to probably did you do this? Did you get a new refrigerator? Did you do windows?
Have you ever heard of a can opener? Yeah, we're constantly can opening these people to get questions out of it. So we are fact finders. And so when a new client comes in, actually every client, regardless if you're new or repeated, we have a 7-page intake form that you must fill out every single year because the government requires us to do that to have updated information in our files. Every year, let me see your driver's license. Let me see your this. And we already have that stuff. You're right, we do. But we don't know what's changed from last year to this year. Neither does the government. And we're extensions of the IRS effectively because if we get audited and we don't have that information, then we get in trouble. And then our licenses are at risk.
Yeah.
So we're not going to do that.
Sure, you uncover a lot.
A lot. And I'm not going to put, the lives of my employees and their licenses that they've worked for on the line just because.
Makes sense.
I'm sure I'm not sure how many people you actually get on a tax season basis that have solar. I'm sure there's a small percentage, right?
It's pretty small.
Is it pretty small?
It is. Yeah. And I would say of the 600 we have, I would say there's probably 20. 25.
Oh, wow.
It's small.
That's kind of surprising in Arizona, actually.
Yeah. And in our fact finding, it's right there in bold. Do you have solar? Do you have an EV? Tell us about what you're doing. Did you do construction on your home? Do you own an Airbnb? All of those things, we can dramatically affect what your tax outcome is.
Of those 20, I know this is a shock, but of those 20 people that come in, how many of them do you think you actually give them shock therapy because they're like, I didn't know that it worked this way? Half. Wow.
And half of those are the ones that don't even bring their paperwork in.
Yeah.
So we're constantly asking for stuff. And so we're always upgrading our systems to communicate whether we forget to ask questions or not.
Yeah.
Half.
That's a lot. Wow.
Yeah.
I mean, it's all about education, just educating the homeowner. And that's what we do at the podcast. And that's what you do with your business.
Absolutely.
So we need to educate people so that they are making informed decisions and not getting taken advantage of. You have this solar system or you have this EV, you have these credits. Let's get them to you the right way,
And just like the IRS, ignorance is not an answer.
No, that's right.
You can't plead ignorance. You can't plead I didn't know.
Right.
Yeah.
It's caveat emptor. You need to know whether you want to or not. It's your responsibility.
Right.
How does it work on a rental home if you have a rental home and you put solar on it?
Owner has to live in the home in order to get the benefit.
Did you hear that, guys?
You have to live.
I didn't know that.
You have to live in the home.
Yeah.
I kind of assumed that.
I've heard that. Yeah, it's an assumption.
So if that's not my primary residence, it does not qualify for the tax credit.
The renter gets the benefit for the lower pricing, the lower fee each month.
The
right?
lower utility bill.
Exactly. Yeah. And so, if you're charging $2,000 all in and everything's included in that, but you're getting the benefit as the owner, then you're making the spread.
Right. Okay.
Similar question. What if I'm not renting out a home? I just have multiple vacation homes and I have solar on each one. Same thing. You have to be.
You're getting the benefit of the reduced energy cost.
Gotcha.
As opposed to the tax benefit. Now, you can
define living in the home.
Yeah. It does.
At 6 months or more, I assume. It has to be a majority of the year.
It's probably full time, but at least 6 months and a day.
Okay.
So that it is considered full time.
Right.
But, in order to
because we do get those snowbirds.
Absolutely.
We have a lot of snowbirds here in the valley.
Correct.
They'll come here.
Yeah.
They want solar for the 9 months that they live here, but then they're gone in the summertime. So
if you do have Airbnbs and you are installing, you're going to pay for it, then you can obviously use that as an expense.
Yeah. I'm sure a lot of people do that.
Just like if you own a business, you got stuff on top and, it's an expense and which will help in the taxes anyways as just a write-off.
If I have a solar installed in this year, 2025, in calendar year. So I wanted to find, this is a very big question that has a million different answers to it if you ask people. At what point does it qualify to get the credit? Does it have to be installed? Do I just have to have purchased it, but it's not installed yet? Does it have to be commissioned and turned on? Is there a point at which you would say, yep, you're good to qualify?
I believe it's when it's installed.
So if it's on the roof, doesn't have to be turned on, in your opinion?
You're getting the benefit.
Yeah, because there's lots of different stages with solar. Correct. It could be on the roof, but then the utility company has to come out and do their inspection. City has to come out and do their inspection, and we have to come out and turn. There's a lot of different. Yeah, just on the roof doesn't mean it's turned on. But okay, so
your installed. Opinion, how you interpret the code is, if it's glass on roof, as we call it, it's qualified. You would go ahead and help them with the tax credit.
I would start to discount it.
Okay.
So with that said, how many days or weeks or months before it's actually turned on from the time it's installed?
Depending on the utility, like for APS, for instance, I think right now they're running 4 weeks.
Yeah.
So we could have it up there and sitting there for 4 or 5 weeks before it ever gets turned on.
Yeah. And then we can estimate what those payments were, right? And so we can backdate when it was installed as opposed to when it turned on.
Yeah. And a lot of times they won't even get a first payment yet. If they're financing it,
exactly,
they typically won't even have a first payment yet.
Right.
But they have it on their roof. They've got the loan for it. It's there.
Yeah.
And you're saying that, in your opinion, that's good.
That could be 60, 90 days before they get a payment, right?
Yeah, it could be.
Days.
It could be. That's his opinion. But I kind of agree. I agree with that opinion. Yeah. I mean, that's kind of where I'm at too. But I know there's other people that say, nope, it has to be commissioned.
Right.
And I'm like, I don't think so.
You even get some sales reps or even homeowners who are like, oh, I signed on December 31st. I signed the contract, so I'm good.
Yep, we got those people.
Like,
then we also
like you just signed the contract. Like, well, I signed it before the deadline, so I'm good. I'm like, no, that's not how it works. I don't think.
Yeah. Some people will say, well, I've got a stanchion up there, so I got one stanchion.
Right.
Installation has started, so that's good.
Yeah. Talk to your tax pro.
Yeah.
That's out of our hands.
I like you. You're pretty solid on your opinion of saying if it's installed, we'll work with it.
Yeah. We'll work with it.
How about, so part of solar, I might need to upgrade my service panel.
Mm-hmm.
I might need to redo my roof as part of the installation to make this work.
Mm-hmm.
Does that qualify for the rebate?
Roof work is
I didn't say rebate. I said I meant credit.
Roof. I don't think roof work would.
You don't think roof would?
But new paint, new panel.
Electrical panel would.
You have to have the panel in order for the thing to work. And so, again, we would work with that to make sure that we were trying to get it included.
But not the roof.
Not the roof.
Some people say, yes, absolutely the roof, because you need the new roof for the things to sit on. And if you don't change the roof, it's going to leak like crazy.
Right. Like we won't install on a bad roof.
Yeah.
So
the government's going to go, you need a roof anyways. You have to have a roof over your head. Government. Right? Yeah. Exactly. That's going to be their argument. You have to have a roof over your head anyways. So whether it's good or bad, you have tile or some other material, that's not their problem. I don't think they would understand that.
So I'm going to keep going down that road.
No,
I'm going to keep going down the road.
Yeah.
These are the questions that we get all the time too.
There's other stuff too. Like, so a lot of solar companies now will sell you as part of it, and the loan companies allow it. A percentage of the loan can be for an HVAC system. It can be for new windows. I'm trying to think what else they roll in there.
Swimming pool. I'm just kidding.
I'm not but the two most common are a new air conditioning system and new windows.
Yeah.
Qualify?
Never heard of that.
Because they roll it all
There's
in.
my caveat. I have never heard of that.
They're rolling it all into the loan so that, people are basically financing a new AC unit and some new windows with their solar system. But then you get the tax
and the loan
credit.
company's aware of it, and they're okay with it. They allow, I think it's up to 40% of the loan to be for energy efficiency items.
Other than the solar.
Yeah,
yeah.
So they say because of that, they'll allow the loan.
Interesting.
And it's a solar loan.
Right.
So you haven't seen that yet, huh?
I'm not.
They're probably just not telling you.
Probably. maybe
right,
not.
right. They'll just say, hey, I have a solar loan. I have a solar system. But
correct. Let me see your paperwork.
You can add that to your sheet. Well, what else did you add to that solar loan?
Exactly. Yeah.
I will guarantee you that out of those 20 people, 15 of them had more than just solar.
That's interesting.
Yeah.
See, now we're going to help him.
Yeah. And I would assume if it's a rental, that would be great for the owner.
Yeah.
That's more of a write-off.
Yeah.
If you're getting able to do all of them at the same time.
Mm-hmm.
Because technically, the right air conditioning system could qualify for a credit. Windows,
it's gotta be Energy Star,
right?
Yep.
Windows can qualify
absolutely
for a credit. So I guess that's how the loan companies are looking at. These are all energy efficient items that do qualify for credit. So we're just going to roll them all into a solar loan.
Yeah.
So
and
maybe
they
that's
get
good.
A bigger loan, which bigger payments, more interest.
Yeah, they just wrap it all in.
That's exactly right.
I think I've seen like Energy Star pool pumps too.
Yes, there's Energy Star pool pumps.
Yeah,
that's true.
So roll that into the loan. Yeah.
Variable speed pumps.
Yep, I got one.
So that could qualify
that
technically.
Works. Yeah.
Interesting.
Landscaping? Landscaping's not. I have seen.
Well,
landscaping.
There's a well.
You're talking about the watering systems.
Watering and
they do qualify.
And LEDs.
Oh,
okay.
Didn't even think about LEDs.
Lights.
Landscape lights, because you can have the solar panels on the LEDs.
And those, wow. I didn't think about that one.
So you can finance your entire house rolled into the solar loan.
I knew the watering systems because like there's a company called Beehive that has the really energy efficient ones.
Yeah.
I've got it.
Yep.
And I got a utility rebate for it. But I never claimed it on my taxes. I should have.
We have a guy who has an electrician. He's an electrical company, and he redid his entire backyard as a showcase, as the showpiece. So he invites prospects to the house to go through his own yard.
Yeah.
Well, that's a right. He's being smart, right? That's his write-off.
Yeah.
We are writing it off.
Of course you are. That's
right.
He's doing it the right way. I mean, that's just smart.
Absolutely.
Yeah, that's really smart.
But he's double dipping because he also has LEDs with the solar panels. And so he's showing people how to be way more efficient from all aspects.
Do we need to edit this part out?
I was going to say, if IRS is watching right now, you'll get his information at the end of the podcast and you get his customer's name.
Right. The IRS has entered the chat.
Yeah, irs.gov.
A lot more stuff than I thought that would actually, if I'm going to roll this stuff into a loan. So obviously when you buy solar, you get a contract and it lists out, it definitely for us, it would list out like you got a service panel upgrade. The roof would not, I don't know if it would be on the main contract or not. It might. And then there's a separate contract for the roof.
You'd think that a separate contractor would need to do that work.
But like we do all of that.
You do that.
Yeah. So we're a roofing contractor. We're an electrician. So we have all those licenses and we do all that. And there's a lot of other companies, not necessarily in Phoenix, but in other places around the country that do that stuff.
They do that as well.
Right. So that's what I'm wondering. What would you need to see on a contract in order? Because I'm sure you have to, is that contract something you have to give as part of the taxes to show, hey, or is it just the form that you're filling out?
We want the contract.
You want the contract.
We want the contract. It's multiple pages long. It's also long as well. So we want to make sure that we're reviewing that as well so that we are informed, because that ultimately will fall on our shoulders, right? So if you do give it to us, it's our responsibility to read it and highlight and make sure. And then we will ask questions back. Did you know? Did you read number 9 that says this about your roof? So that they know what's going to happen. And it's usually 9 out of 10 is no. We didn't read that.
Sounds about right.
Yeah.
Okay. So I'm thinking about those 20 people that you do a year. I'm just thinking to myself, how many of them didn't have it on their contract? And they probably did a roof.
Sure.
They probably did windows. I mean, so I'll just give you a education.
Most of them start with just solar.
They start with just solar.
Just start.
Yeah. So like, for instance, we have a network of people that we work with. We're the installer for the sales and marketing company that will go out and sell solar, right? Yeah. So over the years, we've worked with a lot of very interesting people that we stopped working with because what they would do is jack their commission up to, let's say, instead of this, it was, another $10,000, $15,000. And then they would give people the money or, literally give them $10,000
rebate,
like what do you call it? A rebate,
cashback rebate,
a cashback rebate, right? Yeah. Or I saw one guy that bought a guy a car.
Wow,
I'll never forget that one.
Yeah,
that's when they got rid of him that day. Other things like that. So all underhanded stuff that you would never know about because it's not anywhere on the contract.
Yeah,
and I highly doubt the person's going to say anything to us.
Do you think there's
us to have that info?
Is there any kind of a red flag, do you think, for, let's say, someone installs a 10K solar system, which should cost maybe $30,000 at its peak, right? Depending on financing. Sure. I'm talking cash pricing.
Yeah.
About 25 to 30 grand. Is it a red flag for the IRS where all of a sudden that 10K system costs $75,000? Or do they even look at that, do you think?
Yeah, they would have to know price per
watt.
Or
would you even have a red flag?
Yeah, I don't even know if we would have a red flag. But, simple math would say you pay 75 grand for, 10 pieces of stuff. It doesn't make any sense at all.
Right.
Well, what's weird is because I've heard those stories too with the sales rep. Will, they're gonna add $10,000 to their commission, but then they give that $10,000 to the customer. Yeah. What they don't realize is you're getting taxed on that $10,000 as your income.
Yeah, the sales guy.
Well,
so when you're giving your $10,000 to the homeowner, you get taxed on that $10,000 for your income. So now
you have to 1099 the homeowner.
You're at a loss, right?
Yeah. And you're not going to 1099 the homeowner.
Not going to 1099
a paper trail,
right? But the sales rep is a 1099.
It's a paper trail.
The sales rep is a 1099, so he's going to get taxed on the $10,000 that he made on the commission.
Unless he's giving him the after tax difference,
right?
If he's going to give him $6,400 instead of 10,
which he's not.
Yeah, so maybe he's pulling 35 cents.
He doesn't understand.
Yeah, he's going to go. I'll add 10,000 to my commission. I'll give you 10,000.
Yeah,
but then I'm going to.
It's called rebating, and it's illegal.
Right, but I'm going to be paying now the extra $3,000 because I didn't do it right.
Do you guys? I'm sure you guys deal with there's also the state tax credit. I'm sure you're aware of. It's $1,000 up to $1,000.
Correct.
Right. So
we do.
How does that work? For just educate people on that.
It's just auto. It's built into the IRS. So the software that we use, it actually comes preloaded with the things that are pertinent to the state that we're working on. So if we pull up the software and we enter in Arizona, it automatically knows here are the things that will auto load for you.
Okay.
So we'll go through and make sure. So when we come to that page, it should be there. Of course, we double check it, obviously, but those things are preloaded. It's like our estate planning.
Yeah.
We do estate planning in all 50 states, right? If we open up the software and we hit Alabama, it knows it's auto loads exactly up to the date.
Okay. So you work in more than Arizona then?
All 50 states.
All 50 states for everything?
Everything.
Nice.
That's interesting. So I know that, do you ever do solar from people outside of Arizona? Because there's a lot of different, states that have a lot better incentives. There's utilities that have incentives. There's do you know what an SREC is? Have you ever heard of the SRECs?
No.
SREC is like
it's in the East Coast.
It's more East and Upper Midwest where it's like almost like a stock exchange in a sense where
it's a huge incentive for solar. Like there's a lot of cases where you can I know a lot of advertisements. Solar's free, and it's not really free, but
of course.
But that it could be
actually.
Because based on the amount of production your solar system produces that year, you get paid X cents per kilowatt hour.
Right.
Based on how the price goes up or down every year. And so there's different states where it's so different than Arizona, the way they would have to do things.
And is that because we're Sun 365?
There's just the incentives here are very minimal, right? It's $1,000 up to $1,000 state, and it's a federal, and that's it.
Yeah.
There's nothing else. Utilities used to have it 10 years ago. They would give an incentive, but they don't anymore. That's all.
What do you think that is?
I have my opinions. I prefer not to say.
Yeah. Harmon Solar is not a tax expert. We're also not political experts.
Well, they created pools of money back in the day to get people interested in going solar and to get it going.
Yep.
And so that pool just started dwindling down over time. But that's all it was. I think back in 2008 or 9, the tax credit, not the tax credit, but the incentive was great.
Yeah.
So where they just wanted people to start going solar and deploy it on homes.
Exactly.
And I think got to a point where that fund just ran out. That's really what happened. So. All kidding aside.
Social Security is going.
Yeah. Kind of. I'll never see it. So going into today, so here we are, we're sitting here filming this in end of May, beginning of June of 2025. And there's a lot of concern in our industry right now about the tax credit. I'm curious to see if you have an opinion on what's going on, or we have an opinion on what we think it'll do to the industry, but I'm just curious your thoughts on that.
I think that the credit will stay.
Do you?
I do. I think because and then the reason is because it is only $1,000, right? If it was more and it was causing issues,
that's a state credit.
State credit.
Yeah.
State credit. I think that it just would. I think it's going to stay around.
I think the state credit could stay. What about the federal?
I also think it'll stay around. I think there's incentive for them to do so.
I'm with him. I told you this earlier. Like, I don't think this is going to go away, but
I don't think they may adjust the amounts,
right? Might,
but I doubt it'll go away because solar is not new anymore. Solar has proven itself.
Right.
Yeah.
It's here to stay in some way, shape, or form, and you guys know every day technology gets even better on those panels. It's just going to get more efficient.
Yeah. Yeah. And I think there's a lot of companies that have invested a lot of money in the renewables industry.
Absolutely.
All the solar panel plants that they're building and other things like that. I mean, they're really trying to make everything American made. I think President Trump, if you're watching, and I'm sure you are because you have nothing better to do.
He's watching.
I think you should change it to where as long as it's domestic content made in the U.S., then you should have a tax credit on it. I mean, if you want to make your American made, that's stamp, and that's what you're doing, and I'm okay with that. I think there's a lot of companies that are getting in line to help do that.
Yeah,
let's reward that with that tax credit for those companies and for those customers.
Didn't I email you something on that?
You did, yes.
Yeah,
yep.
And that said that.
Yeah,
they're going to reward you for American made,
and I think they should. Right, that makes sense.
Makes sense.
If that's the ultimate goal. You want to keep manufacturing in this country and everything else, then let's do that. I like that. I think it's a great idea.
I think it's a great idea as well. And it doesn't just have to, doesn't have to apply to just solar.
Absolutely.
Cars, CNC machines, motorcycles, it doesn't matter as long as
manufacturing, period.
Yeah.
I'd rather drive a Harley because I know it's made in the US. I want to ride a Harley. I don't want to ride, a Suzuki.
Yep.
And that's just, I like Harleys and I like the fact that they're made here and I like that they're loud, which makes no sense because I drive an EV, but
didn't you have a BMW?
I don't anymore. I sold it. Not because of that, but I sold
it. It was probably assembled here.
Yeah, but I didn't care about any of that. I just liked my car, but I bought it. I bought an EV.
Yeah.
Right.
I never thought I would ever do that in my life because I like noise. I like loud. That's me growing up, right? I was a race car guy. I love that stuff. But now that I'm older and I want more money in my pocket, it made a lot of sense, and I enjoy it. And you just did the same thing.
He still likes the noise, so I sit in the passenger side of his car and I make engine noises while he's driving. So
you just bought a hybrid. So.
I bought a plug-in hybrid. So
you're kind of doing the same.
Transitioning.
You're transitioning.
It's
a different conversation, but okay.
Completely different conversation.
I think we're going to get into that right now. Wow. So tell us, Ben.
Next on the agenda.
So, and there's other things. I don't know, but we don't really do hydrogen here. We don't do any of that stuff. No. So, that's more, I don't know if you ever see that stuff. You put tax credits on
wind turbines,
or hydrogen.
Never.
That's really popular in the upper Midwest. I know that.
Sure.
The heating with the
geothermal.
Geothermal heating and things like that.
Oil.
Yeah.
Okay. So I think what else? What are we missing as far as the solar?
So what is that process now? So someone comes to you, they say, here's my paperwork. I know I'm getting a tax credit because of this and that. What do you actually do? I'm sure there's forms. I'm sure it has some weird name and number.
Well, not necessarily forms. It's how you just dump it into the software.
Okay.
So there's specific pages within the software that allow us to include that information. And once you're inputting all that stuff, it's auto-calculating the whole way through. Yeah. So once your adjusted gross income is there, which will include that solar break, that solar credit, then you go into what it'll do to the bottom line.
Okay. So let's say I have a $15,000 tax credit coming, but my liability isn't $15,000. It's only,
it's 30%
to $10,000.
Correct.
I can roll that over to the following year.
If you're not using it all, yes, there is a way for you to roll forward.
Okay.
And it will auto generate.
How many years can you roll forward?
I think it's 3.
Yes, I think it's 3.
I think it's 3.
But my question is, how does that work? Is that something that you're going to keep track of?
We do keep track of it.
Homeowner needs to keep track of?
Software will automatically keep track of it.
Okay.
It's way smarter than us. Way smarter. And and thankfully, and
Sure.
so that's what it's going to do for you. So next year when you come in and we're dumping all the information in, it's going to be in there waiting for you.
Okay.
Do batteries qualify for the tax credit?
Sure.
I think I've heard both.
I think so.
I mean, I think it would.
Yeah, I think it would as well.
Mm-hmm. I mean,
without them, it can't work.
There's stipulations, I think, like it has to be tied to a solar system.
Sure. Yeah.
It can't be tied to the grid, because if it's being replenished by the grid, and I've heard that it doesn't work. But if you do it with solar, then definitely
that would be a middleman that shouldn't be there.
Mm-hmm. So I think if we're looking at things to avoid, right? Number one would be listening to a salesperson. No, I mean, really, because you should do your own homework.
Sure.
Right? And anything that you buy, you should do your own homework. You go buy a car, you shouldn't listen to the salesperson.
Right. Take everything with a grain of salt.
You better do your homework.
Yep.
Bring the proper paperwork to you.
Absolutely.
To make sure that you have everything you need.
Absolutely.
And so that you need a contract, right? You need any of the, I mean, really anything that was involved in that purchase, you probably want to see it.
Everything.
Yeah.
Okay.
Even if it's too much paperwork, bring it. We'll decide. And we throw away a lot of your paperwork because it's unnecessary.
Yeah.
So by the time you get done, we want to make sure that what you keep is all you need.
More is better. Yeah.
More is better. In this.
Bring the shoebox full of receipts to you.
Receipts.
Please don't do that.
You guys don't do that anymore?
Be organized, please.
I mean, I think that's it. As long as I've got all my stuff in line and I give it to you, it's up to you to figure it out.
Exactly.
What's going to work for me.
Yeah. And that's part of our fact finding. And that's part of us making sure that we're holding your hand. We have to continually ask you questions about what's this, and why. Mm-hmm. The whys count just as much as the what ifs.
I think it's important. So for me personally, I've had the same tax guy for 32 years.
Yeah.
Right. So I love the guy. He's a friend.
Yeah.
Right? But he knows me. He knows what I've been through.
Exactly.
He has my history. You know what I'm saying? So I think it's so important. I hate the online stuff. I think it's so impersonal, number one.
Sure.
It thinks it knows you, but I just don't like that.
Right.
I think you should find a company that you can work with, that you become buddies with the guys, and you see you every year. You know them. You're talking to them probably for other things as well.
Exactly.
I mean, whenever I want to go do something, I want to always ask my guy, hey, I'm thinking about doing this. What's the implications?
Yeah. Right.
It's an advisor, right?
Yeah.
It's not just a guy I go to and see before April 15th.
Yeah. And there's benefits to that because, like you say, it's more personal, them, and they might find things that like, hey, Ralph, I know we were talking a couple of months that you did this. Did you know that there's a tax break for that?
Right.
Whereas if you're doing it online, like they don't know you. They don't, they're just clicking buttons.
And I think society is getting away from that because we're such a I need it now society.
Yeah.
And I think that's just a mistake. It's a huge mistake.
We slow people down. We slow them down and we tell them we are not here to disrupt a good relationship. Mm-hmm. If you're going to come to us, something has had to gone wrong, right? We don't. We either they fired you or we've had a lot of clients come this year for guys that have passed away, right?
Oh, okay.
And so we've also had guys that have retired, and so we're trying to slowly getting some of those people as well. And so we start that whole new learning process over compared to what their old guy was doing. Mm-hmm. So we want to make sure that we are sensitive to what they were getting as opposed to how we work and make sure that we can meld the two together.
It's a marriage.
Yeah.
It really is.
You're
getting into a relationship
32
with somebody.
years, you said?
Yeah, almost 33 years now.
I mean,
it's a relationship.
It's more than most marriages, for crying out loud. So it's a long-term relationship, and it should be.
Yeah, I agree.
Because that's, you just said, hey, John, I have a question. Is this going to work for me? Yeah, or no, or let me get back to you. At least you have an outlet.
Yeah, I mean, I don't make a move that I know will have some kind of a tax implication without talking to him.
Yeah,
and if I don't, he gets mad at me,
as he should.
As my wife would get mad at me if I did something wrong, right? So it's kind of it's like a marriage.
Yeah,
but it's a good marriage. It's been really good. So I think that's important. So I think that's important for people that if they're looking for somebody. Yeah. Find a company like you that's going to be there with them every step of the way.
Absolutely. For
the next how many years.
And we will tell you to go back to your old guy if it's in fact the best thing for you. Mm-hmm. We're not going to just steal you per se. Now, if you go there and it didn't work out and you fire him, then we're more than glad to take you on, of course. So we are growing. We are still taking on new clients. So
good. Nice. I mean, I'm just not a fan of the whole online thing either.
It
may work for some people, right? It's
impersonal.
Yeah. I mean, maybe for the kid that just has the job that he's making a few bucks, maybe that makes sense for him.
Yeah, sure. And he wants to try it. He wants to see if he can do it. And
I'm all for that. That's fine.
One W-2, it works out great.
Yeah, it's always kind of sketchy when you're dealing with thousands and thousands of dollars and you can get it done in like 10 minutes. Like, wait a minute.
I know, right?
I might have missed something. Something's right. Like, this was too
not might have.
Easy.
You absolutely did.
Right.
Because no one's asking you questions.
Right.
And so now you're seeing these commercials where into it, and those guys are saying, "Oh, just call our tax pro, and we'll walk you through." Well, great. They're not doing it for free, guys.
No, it's like $50 to talk to the tax guy.
And then you're still buying the software, so on and so forth. And by the time you get done,
you're $200 in.
We've had clients come in that have done a business return using an online platform, and it was $1,700.
Oh,
yeah. And it's not a big place like Harmon. It's a relatively small guy like me.
Yeah.
I'm like, wow, that's a lot of money.
Like a small business guy, what would he typically spend on doing his tax returns? I mean, is there an average? I know you can't give an exact number, but maybe an average. Everybody's different. I get it.
It's probably $900.
Yeah. Okay. That makes sense.
Somewhere right around there.
That makes sense.
And we're a little bit more affordable if we can do it.
Yeah.
And if there's a lot of work, like we have a guy out of Kentucky, he's got 26 businesses. First of all, why does he need 26?
Yeah. No kidding.
By the time we get done, we have a lot of time invested because I have to put 2 or 3 preparers on the amount of work that needs to be done.
Yeah.
And he's actually one of the businesses is an energy guy. He's a gas guy. And so by the time we get done, it's $7-8 grand.
But that makes sense.
Yeah, it's 4 or 5 months worth of work.
Yeah, I mean, that makes a lot of sense.
So, and we're write-off, so technically you get 0.
Yeah.
So it makes one of the things that we do stress to people.
What does the average homeowner pay if they come to you? I mean, again, can't give me exact price, but I know that everything's different. But what's the average homeowner pays? About $400?
Yeah.
It's pretty good.
H&R Block is $800.
Yeah, I was going to say that's
for the same return.
Yeah. It's pretty good.
That is pretty good, actually.
Do you see any commercial solar?
No, I don't. I was actually going to ask that question. I mean, I don't see any. Me personally, don't see any of that at all. And I don't know why.
I was just wondering if you dealt with the tax credits with that, because I know
we have not.
Probably very different.
I mean, I would think
separate.
Most companies, especially we do bigger commercial solar. I think most of those guys already have either their own in-house accounting or they have firms they're hooked up with. I mean, you know what I mean? That's probably why you don't see a lot of that.
There's still someone doing the tax returns, but the CFO and the accounting people are manipulating that throughout the year.
Of course.
Sure.
Yeah.
And I'm sure that's probably why you don't see a lot of that. But I would think you see a lot of small business people that would come in and they just don't do solar most of the time.
They don't have,
they're buildings
they're still working out of their house.
Yeah, exactly.
Right? And so we can help them there. But if they're going to transition to a small industrial building and they're going to buy it and then put it on, we can totally help them. And that would work really well.
Okay.
Sounds good.
I could see why you're not seeing a lot of those, though. That makes sense.
Yeah.
What else, Ben?
I think that's about it.
You have anything for us that you want to know about solar? Any questions?
Why aren't more small businesses putting it on? I mean, that's a great question because we do have clients that are small businesses that own their own buildings,
I think,
or industrial unit type things.
I think commercial. So we typically deal with. We used to deal more with the small businesses, but it's really a tough. As an installer, you don't want to make this. You don't want it too small of a system because there's a hard cost there.
Yeah.
That makes it very hard to go solar at a small system size commercially.
Right.
Because you have to cover that hard cost no matter what.
Yeah.
And it just takes the benefit away.
Yeah.
Yeah.
So we deal more. You can go ahead.
Yeah. The behind the scenes, I was a commercial project manager here. So the behind the scenes work for a small system or a 2 megawatt system is the same. The engineering, the permitting process, all that stuff, it's the same. So when they take a look at like the return on investment of a smaller system, they're like, it's not that attractive. Whereas because of all those hard fixed costs.
Yeah.
Whereas a larger system, like, wow, return on investment is great because you can absorb a lot of those smaller those fixed costs.
Yeah.
Yeah. So I think that's what it is. A lot of those smaller businesses, a lot of them don't go solar because it doesn't make financial sense.
They probably don't even know they can.
Yeah, I think some do. True. I mean, it depends. You see a lot of what we see a lot of us. We do all the big ones, but the churches all want to go solar. They just don't have the money.
Yeah.
But every church I've ever talked to wants to go solar. But now that's interesting. So I know there's a change in the tax code where the churches now can take advantage of the tax credit.
Yep.
And there's something called direct pay.
Yes.
That's in there. Do you know anything about that?
I can't elaborate on it, but I've heard about it so far.
Where they actually get
schools as well, charter schools. A lot of charter schools are doing it because they're privately owned. And so the owners of those buildings want to take advantage of that too.
So my understanding with direct pay is they will actually cut them a check and give them a check to where we talked about it for a long time. We talked about today is that, you don't get a tax, you don't get a check. My understanding is commercially with direct pay that You do. It's different.
Interesting.
I'm not educated on it, so please.
Yeah. You're not a tax pro.
I didn't say anything on that.
Okay.
But this is what I've been hearing as far as that's how it's supposed to work. So maybe we'll dive into that, sometime.
Yeah. You give me homework. I'll find.
Yeah, I give you homework.
You need from me.
And I think another reason why these smaller commercial businesses don't is because they don't own the building. If a lot
of them don't.
If they're leasing out, office space and things like that, they don't own the building to put solar on. So
that's true.
Yeah.
That's a very good point. Yeah, most of them are leasing.
Yeah.
If they can get the owner of the building that leases it out to put solar on, we've had that happen before.
Correct.
So you get a strip mall or something, right? And they get ahead and put solar on, and they pass some, or they don't pass it at all. I don't know what they do, but yeah. So that would make sense as why that doesn't happen.
Yeah. But it could benefit both.
Yeah. I mean, this was good.
This was good.
This was really good.
How do we find you? I know we're neighbors.
We are neighbors.
We are.
Did you walk here?
I'm too fat.
It's hot outside.
It's hot outside. No, we're just right down the street. We're at 615 West Deer Valley Road, and we're here. We work Saturdays all year long, and so I don't sleep. So I'm there at 7 o'clock.
I don't sleep.
I don't sleep.
You're
very
a 24/7 tax person. Okay, that's great.
But we're there. Someone's there all the time, and we do we're full state planning, tax planning. We actually build tax plans for someone who maybe has a larger tax bill, say 100, 200, 300,000 in tax bills. We can build plans to go out to help address those things into the future, and make sure that last year looked better. So we establish a good yellow brick road, so to speak.
If they want to build a trust or anything like that, you can help them with that kind of stuff.
We can help them there as well.
Nice.
Okay, that's good.
Financial planning, IRAs, 401ks, whatever that looks like. If you've left a job year, 2 years, 5 years ago, and you left your 401k there, we can help you get it to a safe place.
Help us roll it over somewhere.
Roll it over, transfer it. We utilize a lot of life insurance for estate planning as well as legacy planning. We can build income out of life insurance today. So life insurance has become a very, very solid planning tool. It's not just a death benefit anymore.
Yeah.
Really?
There's living benefits. So the longer you live, the better it gets.
I don't have life insurance. My wife keeps telling me, you need to get life insurance. Look at you. I'm like, all right. So it's...
What's the best way to contact you? Social media, phone, email?
Phone, 623-889-3403. Okay. You can always website www.arptaxpro.com.
arptaxpro.com.
Yep. Okay. Or my email is wmspar@arptaxpro.com.
You're not on Instagram doing some dances and
TikTok videos.
Negative.
I could see you doing TikTok videos. It'd be great.
I can probably get my daughter to do that. She's more adverse.
All right. Thank you so much for joining. We really appreciate. This is something we've been totally looking to do.
Appreciate the time and the opportunity, guys.
I'm glad we do it. Hey, we might have to talk about some life planning stuff
for sure.
Because I'm not going to be around much longer.
You're getting to the end of it.
That's not. Those are the ones that last another 30, 40 years.
So, Ben, what's next?
What's next?
I know what's next.
We have a company that does a lot of different types of alternative energy. We're recording that actually in an hour.
And they're actually in Missouri.
Yep.
So this will be our first attempt at doing something outside of the state.
Yeah, a little virtual podcast.
Very nice.
We'll see how it goes.
We'll see how it goes. It's going to be a disaster.
It's going to be a disaster.
Anyway, thanks again for joining us, and we'll see you soon.
Thank you.
Bye.
Appreciate it.
You've been listening to the Harmon Solar Podcast with Ben and Ralph, bringing clarity to the intersection of solar power and smart home ownership. If you found this episode helpful, don't forget to like, comment, and subscribe, and also share the show with others navigating the solar journey. For questions and topic suggestions, call 800-281-3189 or visit harmonsolar.com. You can also connect with the team on social media. See you next episode.